Hello everyone, today is Friday, January 27th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 668, where we break down the most important trends, price action, and noteworthy moves across financial markets. And we're going to jump right into some of those key moves from this week right now. So first and foremost, Nasdaq 100, Nasdaq Composite Technology, however you want to frame it, is leading the charge, continues to lead the charge, pushing to multi-month highs, 4.5-month highs for the Nasdaq. I believe it has crossed its beloved 200 SMA, testing it now for the first time in quite some time. And lots of folks are excited. In fact, that's actually our third point here, is that excitement is starting to rise pretty quickly, starting to get a lot more bullish excitement, bullish ideas, lots of long ideas across social media and from conversations and traders. So I think, the bull is slowly getting kind of ratcheted up here as the market digests earnings and economic data as frankly bullish or sideways, or it seems to, kind of shrug off bad news pretty quickly and then find a bid throughout this week. At least that's been the case, and obviously this year. So tech is continuing to lead that charge. The dollar is starting to base sideways. We're going to talk about King Dollar in part 2, and we do have Apple, Amazon, Google, all reporting Thursday of this coming week. There's obviously a lot more companies reporting. I know Facebook's in there, I think Wednesday, and a very busy week. It's actually going to be the busiest kind of peak week for earnings this coming week. So we've got lots to chew on. We've got the Fed, which is going to be out soon as well. So with their, it seems to be an anticipated 25 basis point hike. We'll see what happens. We'll see what guidance they can give us in color. But that's everything that's going on. So let's jump into the numbers here. If we look at the right-hand column, this is the 1 week returns. And again, you can see Nasdaq 100 up almost 5% this week. Everything else was green. Look at the 1 month returns now. You can see the Nasdaq 100 is in the lead. This is a trend that we started talking about last week and a smidge the week before about just technology and the hated sectors of the market bouncing aggressively here, and that continues to be the case. Now, if we look at these broader term trends here, again, you can still see this isn't new. Short-term, medium-term trends all on the rise here, and this has been the case for the past few weeks. So the folks that are jumping on the bull bandwagon now, I'm not going to say they're late, but they're at least a few steps behind, so to speak, right? So we've been in this rising short to medium term environment here. 200 SMA, like we say, still declining. We're testing some of these longer term moving averages now, but generally speaking, the short and medium term momentum is continuing to the upside here. Now, market breadth is still positive, still picking up to the upside, right? These are all themes that we started talking about, frankly, at the start of the year. This is where we got kind of our eyebrows raised a little bit, looking for some of these bullish ideas to unfold. And we continue to see that the NYSE 52-week high lists continues to outpace the NYSE 52-week low list. So we had 451 aggregate highs this week made, 72 on the low side. So that's still heading in the right direction. As I've spoken about, I do want to get these numbers into the triple digits. I want more Thursdays. I want more stocks at, more composite readings here that show 100 plus stocks consecutively breaking to new 52-week highs. That to me is a healthier, kind of more broad-based market. So that's what I'm still waiting on here. Again, good steps. It's holding the ground. This is something I'm going to be paying very close attention to over the next couple of weeks, but I want to see more pickup here on the stocks hitting highs. Now, in terms of sector performance, again, very, very stacked this week in terms of tech and a handful of stocks. Consumer discretionary, communication services, and technology. Those were the big three this week, 4 to 6.5%. Tesla in here in the discretionary category makes up a huge weighting in the XLY. And of course, that was really moving this week after reporting earnings and before reporting earnings, Tesla has seen a pretty remarkable bounce off of its lows. On the downside, extremely defensive tone to the market on the underperformers this week. So healthcare, utilities, and staples all flat to down just slightly. Now, IBD industry ranks here. So IBD is a sponsor of the show, so shout out to them for supporting our content, making the show possible. They are running, actually, what I believe is the cheapest I've seen them run, 5 weeks for $5. And it is on select links here, so you have to pick it up here. There's a few other places I guess you could find it, but basically, if you go to this bit.ly link here, there'll be a link in the description. You can jump on their digital subscription for 5 weeks for $5. Try them out, see if there's any value for you. But this data table comes exactly from this subscription here. So this is just one of the data tables they update every day. This is their industry ranks and a couple of call outs here. So first off, steel producers making the top 10 now. So a few weeks ago, I guess it was ranked number 10. It's moving on up here in terms of steel and commodities. And then if you look down here, mining, gold, and silver companies. So you've got this moving very far up the list as well. It was rank 82 just several weeks ago. Now it's in the top 10. So we're seeing a more industrial sort of tone here to the top 10. Notice technology, as we just mentioned, has gotten this nice push to the upside, but it's not quite in the top 10. It hasn't done enough to repair itself just yet. Nasdaq had been, the weakest of the market in terms of 2022. So it is just in the short term building that momentum. Everything longer term here is still on that industrial energy sort of tilt. So check out this link here in the description. See if this subscription will be helpful for you. So we already looked at sectors, looked at rankings. If we look at correlations, this is something that is finally starting to have some more color on it in terms of its diversity. So if you recall from 2022, I could have probably pasted the same image every single time, week after week, and everything was essentially bright green and then, some bright reds, which were basically the risk on, sort of risk off types of, environments that we were in. And now you can see there's just a lot more decoupling going on here. And that's in fact just a healthier market environment when everything isn't just moving in one, lockstep with one another. So I think that's interesting. There's not a whole lot of call outs, I don't think, for me, except for the fact that the correlations have broken down pretty significantly, even between the dollar and interest rates and equity markets. There's still some, inverse correlation there, but a lot less than certainly 2022. So we're going to end here with our trading system positioning here. So again, we run two trading systems, medium-term long-only system, and then a short-term tactical multi-day trading system. And you can see that both of them are on the long side of this market here. So Merlin, again, as we talked about multiple weeks ago, was starting to build and increase that exposure, and it continues to do so. It still has some cash on hand, but it's about 60% invested in the market right now. So it is taking some swings on that intermediate-term basis. And our short-term tactical system has been kind of rotating around, but it's just slightly long here, not doing anything too extreme at this current point in time. So if you want to learn more about these trading systems, if you want to get nightly trade reports after the market close, check out the $1 trial we have on our website, traders.com/trial. See if it's a good fit for you. Learn more about the systems. And with that, we'll be back here with some charts in just a second. All right, we are back. We've got TC 2000 open. We are looking at the S&P 500 cash settled market, and this is a daily time frame. So for folks that tune in regularly, this is our roadmap that we've been looking at for a very long time with all of our key levels mapped on here. And if we take a close look at this week's price action, it behaved and responded pretty textbook bullish here on really all days. So we came into the week with a nice kind of follow through day and push right into the prior week highs. So if you recall from last week, we talked about, in fact, the title of the video was the buyers holding exactly where they needed to, right? Bulls stepped up exactly from a technical perspective, exactly where I would have wanted them to hold the line around this 3,900 zone. Talked about adding to my S&P 500 position, and that was really, the game plan from the prior week that we had in our Friday SMW video. So we got this nice, beautiful kind of technical hold and bounce on Friday of last week. We found follow through Monday, inside day Tuesday, and Wednesday was the only sort of tricky day, I would say, for this week's trading. We started with a gap down and we got all the way back down to about 39.50 or so. So there definitely was some volatility, some indecision, a little bit of a shakeup occurring here on Wednesday. But if you look at the closing basis, I mean, if you were only a trader that looked or came to the market after the day has already closed, then you would have seen basically the market flat 3 days in a row, or 2 days in a row. So all is to say, dip buyers stepped in here. They held the line. They drove us towards highs. We found follow through Thursday above last week's highs. And then on Friday here, another, positive session, but off of the highs. So S&P 500 basically, continues to ratchet higher here to be supported exactly where it needs to, not without some volatility. So like Wednesday's session, there is some volatility here, but the trend, the behavior, the dip buyers, they are back. They are in force this year. The turn of 2023 definitely changed the tempo of this market. It's not just this week. It has been the behavior since the start of the year. We've been talking about these bullish developments. So as I look at the S&P 500 now, we are up at higher levels that we haven't seen since December. We're back to sort of the top end of the December range, also where we topped out in September, and also had some levels over here back in May. So this area around 4,100 is pretty influential. It's what I would consider to be some overhead resistance to kind of persist around this area, and clearly you saw the initial test of this back off a little bit on Friday. So for me, I guess I'll speak to my position, or this trade that I was sort of outlining here over the past few weeks that I had in the S&P 500. Started on this day here, basically is when everything got established, took profits, reloaded into here, and throughout this week I lightened up considerably on this position over the latter half of this week, basically selling down this position. Still net long, still have some on, but very small size, and in fact sort of spread out into some other specific sectors. So I am much less net long here into the close of this week than I have been at any other point throughout this year. So that's my discretionary trading. Of course, we talk about the Merlin trading system, the Lamerick trading system. That's where most of my money gets allocated anyhow. And so those systems are going to do their thing, and we already talked about their exposure. But from that discretionary trading standpoint, that's kind of my thought process, or how I managed this leg up. I am just, again, looking at the market where it is now, around 4,100, a lot more excitement. Sentiment seems to be starting to flip the other direction. I'm not saying that we can't continue to push higher here. In fact, it is still the path of least resistance is higher. But, to me, the kind of easy money of hitting these kind of initial targets here was what I was playing for. And that was a very visible sort of path for the market. I suspect, 4,100 and beyond is just going to be trickier. We got a lot of earnings coming up. We got Fed coming up. So there's just lots of different interesting catalysts that could potentially, just change things up. And so I wanted to reduce a lot of that exposure into that event. So basically S&P 500, 4,100, that's where I want to see it break back above. That's the next, hurdle to get over. I wouldn't be surprised if we digest a little bit. Again, we talked about earnings, a very busy earnings week this week. So, we may not get a big through move until Thursday, Friday, after we get some more clarity from some of the big mega cap companies reporting. So it does seem, or it does feel like, there's been some maybe some short stepping aside, or some squeezing happening, just given the fact that, we look at things like Microsoft, which initially had this big reaction down on Wednesday, which you could argue is what took the market down initially on Wednesday. And then the dip buyers, kind of came through, followed through, and then pushed higher. And then you look at something like Tesla, and of course, there's lots of other examples this week, but just the big heavyweights, this ran up into earnings and then reported earnings. It gapped up and then it continued to squeeze. So I think seeing these two has probably got some of the shorts, potentially going to get out of the way here before the big showdown of Amazon and Apple and so forth. So yeah, that's kind of the roadmap I'm looking at. Uptrend is intact. Momentum is intact. Watch 4,100 on the upside, and then about 4,000 or so. I mean, if we started to lose Thursday's lows here, if we started to break back below 4,000, this is definitely going to take some momentum out of this bull case. So keep this if you're very short term on the radar, and then ultimately 3,900. I mean, these are the same levels we've had drawn on here, but they continue to work just very, very cleanly. So that's what I'd be watching for. If we look at the Nasdaq 100, you can see that, of course, this is where all the love is coming in. We got MACD just pushing up to new highs here. We see almost 5% move this week. We're taking out these prior highs here, and this looks like it does have some room to run. It's got room to run up into the mid 300s here, 310s rather, which would basically be the highs from May, some congestion here in September, and just, broadly speaking, some general inflection points. So for me, on the Qs, it does feel like we could get all the way up another 4% or so, which would be pretty nice of a move off of the lows. If we get up to this level, that's about a 20% move off of the lows from earlier this year, frankly. So that would be very, very impressive. It's getting a little bit long in the tooth. It's getting a little bit extended, but again, with some of those big heavyweights reporting this week, I wouldn't be surprised to just see, some more extension here if shorts continue to cover and people have to chase this market higher. So risk is definitely picking up a little bit in the short term. That's how I would define this. But right now, you can't really argue with price. It's moving higher. It's squeezing some folks. It's causing folks to FOMO in here. And so just understand if you're buying in at these levels, just know where the exit door is. For me, Q's now just 282. I mean, and that's got some distance between there, but that's really the bigger level that I would be paying attention to going forward. And for me, I'm not really participating in the chase here any longer in the Qs. If we look at the Russell 2000, this is also now back into some stiffer resistance here. This is, broadly speaking, some of the more well-defined of the indices here. It's been chopping around at this level. I mean, it's back to basically these January 2022 lows here. I mean, this was a range that we carved out at the first half of the year last year, and Russell 2000 is just very, 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 very flat. And so it's coming back into this zone. It's got some momentum. It's got a little bit of pep in its step. So we're going to see if it can continue to hold above this 189 zone. That's approximately the November, December highs. This would be good if we can continue to see support here for small cap stocks and we see a breakout over 190 and some continued momentum. That would be a very good underlying healthy thing for the market. And so we'll take it one day at a time and see if that can take place. So that is the general pulse and read on the major indices. If we take a look at volatility next, you can see that VIX this week closed down towards the lows of the year, back into the 18s or so. It had this nice flare up into the 20s just about a week ago, which seems like forever ago, but is now just a distant memory. Back, kind of sinking lower here, back into the teens. Good place to be if VIX can stay under 20. Good things can happen in the market here, so let's pay attention to it. Again, lots of stuff and catalysts on deck for next week. If we take a look at the dollar, this is where I start to see, just a little bit of change of character here, just maybe a little bit more persisted sideways action here. I've been watching the dollar closely. It does seem like it's been trying to get these little brief, reversals to stick, and none of them end up sticking. They all resolve lower, and this overall trend remains down. But now we're getting just a lot more kind of overlap sideways here. You got the MACD momentum, which is trying to rise negative, but still trying to show some positive divergence. So keep an eye out on this. I do think the dollar would act as a wrecking ball if it does start to lift up here and break out to the upside, but it just has not happened. We've been watching it. We've continued to, essentially warn about that, but it just hasn't happened. So let's keep an eye on it, but nothing to report as of right now. And finally, if we look at oil, I do think we got a slight change of character here on Friday. So pay attention to this if there's any follow through. This went sideways for about a full week of trading, very, very tight. And now you saw a slight uptick in volume here on Friday and a, kind of engulfing bar to the downside. So if this gets some follow through, it looks like oil could start to, break down and kind of fall back into this old consolidation pattern. So that's, I think, everything I had to say about the broader market. If we take a look at some of our scanning here, I'm not going to run through everything today, but you can certainly see, software names here making the list back to the upside here. Again, they were unloved and beaten up and hated for most of 2022. A lot of that technology and growth stocks type of plays are starting to get at least a bear market bounce, maybe something more material, but that's certainly evident here by some of the price action that we've seen over the past couple of weeks. On the downside, you're still seeing some healthcare. You're still seeing, in this case, railroads. It looks like starting to lose some multi-month lows, and then healthcare, just generally speaking. XLV, I actually do have a position in this. Looks pretty orderly consolidation going on here, but is still an underperformer on a relative basis. So that's it. That's what I've got for this week. I'm curious your thoughts. Are you believing the rally? Are you feeling the FOMO? Are you chasing in? Do you think a new leaf has turned here in the market? Or are you still thinking we're in the same old kind of treacherous bear market that is just seeing a temporary relief? Leave a comment below. Let me know what your thoughts are ahead of a big week of earnings. Don't forget to protect yourself and keep an eye out on those company reports. If you're holding stocks, make sure you know what those earnings dates are so you're not surprised when you wake up in the morning. So that is it for me. Thanks as always for tuning in. Don't forget IBD link in the description of this video, $5, 5 weeks. And don't forget our trading systems as well. If you need some help managing and looking for some signals in this market, check out our $1 trial on the website. Take care, and we'll see you back here next week.